afternoon, everyone. You're all very welcome to our weekly market roundup here at the Alpha Capital Group prop trading firm. So good afternoon for everyone who is watching along. This week, we're obviously going to be going through the dynamics within the markets, updating where the markets are at, given the volatility that's ensued both this week and obviously last week. And of course, looking ahead to next week as well. Now, obviously, this week has been the start of earnings season for the US stock market. So we've seen Tesla come out report earnings this week. We have seen a lot of the banks report earnings this week. And of course, on Wednesday, you would have also seen the Netflix numbers coming out. So that's obviously an important factor. If you trade US indices, you should be very much aware of the dynamic within the markets and how stock earnings can potentially affect the indices. Because of course, these indices that a lot of traders are trading on are effectively composition of several stocks compiled together. So it's important to know the weighting of those indices and how different individual stocks hold value in those retrospective indices, but also understanding the dynamics that if, let's say, a stock or company reports earnings, how is that going to affect the markets, broadly speaking? All right. So this week, as I said, you will see very firstly here that the earnings reports for the week ahead, so this week gone by, should I say. So we've had Bank of America, we've had Morgan Stanley, we've had Charles Schwab, BNY Mellon, a lot of the banks effectively. And then obviously towards the back end of the week, we've had some airline aviation stocks reporting earnings. And as I said, the Tesla and Netflix, who would hold a primary weighting in the Nasdaq. Okay, so that's obviously quite important because, of course, if you trade Nasdaq, you should know or have a good idea, well, what is the weighting of Tesla within the Nasdaq, or what is the weighting of Netflix within the Nasdaq, for example. All right. So this is the week gone by. So obviously next week we'll have a lot more earnings. Not just next week, but over the next couple of weeks we'll have Alphabet, which is Google. We'll have Meta, which obviously was formerly Facebook. We'll have Apple, Amazon, Microsoft, Nvidia. So a lot of these primary and high valued stocks will be reporting earnings, not just next week, but over the next couple of weeks. So keep an eye on the calendar. I definitely think it's one to watch out for. When it comes to the earnings season in particular, they'll either be released before the US market open, which US cash price open in the UK is 2:30. I think it's about 8:30 Eastern time. So you'll see earnings coming out before market open or after the market close, right? So after the market close in the UK is 9 p.m. UK time. So obviously worth keeping an eye on anything coming out between, let's say, 9:15, 9:30, 9:45 p.m. if you are UK based broadly beyond that. Now, obviously, if you're European based, that is obviously going to be later. So you're going to just have to factor in the time zone difference in that as well. All right. So that's really the starting block for this week. Obviously, reporting earnings is going to be interesting. Now, overall, we've seen the broader team and the broader dynamic play out of a very strong, resilient market through July. But of course, we'll be looking at that shortly. Now, moving across to the data this week. So, of course, this week has been a fairly busy week in terms of economic data. I suppose the two big takeaway points, both from Canada and the UK this week, is obviously lower than expected inflation. UK inflation has gone from 8.2% core, or headline, should I say, from 8.7 down to 7.9. Beating that forecast of 8.2% that was reported on Wednesday. So that's obviously a good thing for UK residents, obviously because of the price of goods and services are now coming down quite rapidly. So you can see there that the illustration of those increase in interest rates that's been taking out over the last kind of 6 to 12 months is really starting to come into effect in the UK markets. Now, similarly as well, you'll also see that the Canadian CPI figures has continued to decline. So Tuesday's CPI figures in Canada coming in lower than expected, which is obviously going to mean weaker currency. So we've seen obviously the Canadian dollar tail off on Tuesday. We've seen the pound considerably tail off Tuesday, Wednesday, and Thursday of this week as well. So it's just about kind of watching that from a fundamental perspective. Now, of course, with that, we've had a lot of data out in Europe. We've obviously got harmonized consumer prices, which held up pretty resiliently. We have seen the euro tail off a little bit Thursday and obviously overnight, but overall, the Euro USD in retrospect or comparison to the pound, comparison to the yen, comparison to the Aussie has still held up fairly resiliently. So worth keeping an eye on that into the weekly close. Do we start to see euro dollar breakthrough? Because of course we know we've taken out 112 this week, which we'll look at shortly in the chart. It's now a case of can we break through 111? can we assimilate a deeper decline, deeper pullback against what's been a very, very bullish trend for the last number of weeks. And then that really brings us to today, right? So of course today, for those of you who are not aware, today is options expiry. So of course, if you're an options trader, that is going to affect markets. That's going to affect market performance, whether it's indices primarily, or as a correlation to trade the majors, like for example euro dollar, like for example the effect of dollar strength or dollar weakness in these markets at current time. So without really further ado, let's get into the price action this week. Okay, so first things first is really looking at that dollar. So really since the NFP from the 7th, 8th of July, actually 2 weeks ago from today, 7th of July, we have seen a very, very clear deterioration in the performance of the dollar, right? Because the dollar has been considerably hit week after week now for multiple weeks, and we're really seeing that very, very clear assimilation. So really from NFP over here, early parts of July, we have seen that very, very clear deterioration into these midweek lows that's obviously formed tail end of last week, but more broadly into the early parts of this week. So it's only really been Tuesday, Wednesday this week when we've actually started to see that dollar pick up a little bit of a strength off of what's been a very, very clear couple of weeks of heavy selling. And we know that whole narrative of what goes down must go back up eventually when it comes to price action is a very, very clear theme of what we're seeing here in the dollar through the month of July. Very, very heavy selling, selling participants in the market very much eroding, taking profits on those positions, and we're starting to see that shift in sentiment back up. And that's atypical of what you tend to see and tend to expect when it comes to trending price action. And that's obviously very, very clear across the board. So you look at, for example, if you look at the bigger moves, obviously on the DXY, new lows for the year through 101, back into that 100 level, where we're obviously finding a little bit of buoyancy today, back into 101 again. But that's been very, very much visible across the board, right? What's been the key narrative or the key theme across the board? If you look at Euro USD, we've had, obviously with that massive sell-off in the DXY, that has fueled euro dollar to come up to 112. Now, as we said today, we've broken through 112 this week. Primarily yesterday, we started to see that euro dollar slide back into 111s. And now it's really a case of, can we continue declining? Well, at this moment in time, it looks very much primed for a potential breakthrough 111, allowing that deeper continuation of selling bias down into some of these fair value areas. So around 110, 110.50 becomes a very, very clear potential target point for those who are in proactive selling positions in the likes of Euro USD. Now, obviously, if we move across to cable, you'll see very, very clearly that obviously that's a similar theme, but the pound selling is a little bit further in its movement or in its trend than that of Euro USD, right? Euro USD is still fairly high up in the trend, whereas the pound is much, much deeper. And of course, on Wednesday, we had the weaker than expected inflation data, which further assisted that pound retracement. So that pound rally that went from 126 into 128s and then on into 131s is very quickly becoming diluted up here, which had done so at the early parts of this week. And it's just been a very, very clear cycle of price action. And as we see, price action is working itself back into this 128 level. Now, whether we continue to progress through 128 and really kind of continue to pull back and mitigate this order flow that we saw through the end of June and obviously into the first couple of weeks of July, and obviously mitigating that is going to be the question, right? Because of course we are coming into fair value here around 128. So it's evaluating to see, does the price action continue declining, taking out those short-term barriers, and obviously continue to decline even further, which would then bring in some of these daily levels down here. When you look at daily order flow, you're looking at 126.50, and just repeating the current trend of high, low, followed by new highs most recently at the beginning of this week, and that very, very clear deterioration Monday, Tuesday, Wednesday, Thursday, and into today, obviously in the declines in pound dollar. Now, moving across the dollar yen, it's an interesting one because, of course, we've had those two kind of flows or trends that's been migrating in the DXY, right? Obviously, much weaker DXY over the last few weeks, that leveling out, that little bit of a bottom coming through, profit taking on buyers on Euro USD, profit taking on buyers on GBP USD. Those, shall we say, switches in sentiment taking out, and we're seeing those regurgitations back up again. Now, obviously, what's been the big theme last week, obviously off the back of NFP, massive deterioration in dollar yen from 145s all the way down into this 138 level. Now, you look at isolate the price action from there, we find our bottom, we start to accumulate, then we start to make short-term highs on the order flow. So if you go down and look at the internal structure, that lower time frame structure, you'll then start to see, well, there's a very, very clear observation. If I just delete this and tidy this up for a second, you'll see short-term highs from a bottom. You'll get a bit of a pullback, you'll get new highs, a bit of a pullback, new highs, bit of a pullback, until then when we start to see the price action aggressively start to migrate or mitigate and retest and pull back against that heavy trend that took place over the last week, 2 weeks prior to obviously the middle of this week. So again, going back to that adage of what goes down must go back up eventually. And all that is just simple price action. So we know price action is by definition the constant or continuous battle between buyers and sellers in the markets. If there's more buyers in the markets, the asset or the instrument is obviously going to rally. If there's more sellers in the market, obviously the asset is going to decline. Now, as I said, the last 2 weeks, we've had very, very clear selling against the dollar. That trend obviously looks to be abating. It looks to be leveling out. We're now starting to see that rotation back into dollar strength as well, which is obviously allowing these upside movements in dollar USDJPY pairs, but also declines against the euro, declines against the pound, which is exactly what we are seeing at this moment in time. Now, obviously last in the FX markets, before we move to gold and then finish off in the indices for today, is the Aussie, right? So the Aussie has been another very, very clear example of that. Obviously, the correlation with the DXY has been integral because obviously stronger dollar, AUDUSD has obviously moved lower, and vice versa then as well. Now, with the Aussie dollar, we have seen very, very clear drives both ways over the last month or so, obviously depending on which way the sentiment is obviously tilting. Now, when we look at the top-down analysis, looking at the daily perspective, you will see that this level that we talked about over the last few weeks into the early parts of July, around 66, finding that value area was obviously going to be important because we had a 3-month consolidation. We had an aggressive break to the downside only to create that U/V-shaped structure reversal. And then we found ourselves back into the value area. We found ourselves taking out those short-term highs up here around 68, creating that apex structure. So what we then had was effectively a 3-month-long consolidation with market manipulation on both sides, taking out the lows initially, then taking out the highs, finding ourselves back into the bottom of really this value area, which we quoted around 66, 66.50, which held perfectly. And then, of course, last week with that deterioration in dollar strength, where that DXY started to roll over, we got that aggressive move back into 69s again. Now, ultimately this week, we haven't continued progressing higher. And the reason for that is because it's been very, very clear that the dollar has been picking up some strength. So with the dollar leveling out on its selling, and of course, progressing higher into that range where it's obviously sold off from over the last couple of weeks, has allowed the AUDUSD to hold that 69 level and actually pull back into this range again. Now, at this point in time, when you're midpoint, obviously between 66 and 69 at 67.50, or just marginally under 67.50 now, it's more likely that you see or should be waiting for a continuation in selling and then seeing if there's another market reaction down here, because we know that from history, both on the daily but also on the lower time frame structure, clear value area down here around 66.50. So worth keeping an eye on that. We're definitely looking at DXY still holding a lot of its strength. I think today is going to be big because if you look at price action on the DXY, a big supply and demand support and resistance level in the markets. Now, we know that institutions can see all of that. We know that from a market making liquidity perspective, that's where a lot of the not shall we say the dumb money, but a lot of the retail traders who tend to get stopped out regularly, who trade only support and resistance, need to be figured out. Well, if we get a navigation and get a close above 101, the likelihood is that decline in the dollar is most likely going to continue further up into the range, allowing a deeper mitigation, a deeper retracement against that heavy selling that was visible, as we said, through the first few weeks of July up until really the beginning of this week. Now, moving across then from the DXY out of the FX pairs, the majors, into gold has also been an interesting story, right? Because of course, we have seen with that weaker dollar play, we have seen very, very clearly, well, what's been the key contributing effect to gold prices? Well, the key contributing effect to gold prices, as the chart is currently loading, is being that, well, when the dollar sold off very, very aggressively, and let me show you on the daily chart for a second, that's obviously enabled the gold prices actually to come back up to this retracement area right now. So obviously when we look at gold prices, you'll see a big supply and demand level there around 75, 80. We have obviously order flow liquidity up here between the 2000, 2010 level. But so far this week, the market dynamic has held this price action level. Now, obviously, as I said, with that stronger DXY, it has clearly brought in a little bit of selling over the last few days. So as the DXY has picked up over the last few days, gold has actually come back from that 80 level back into the mid 60s. So now it's a case of, well, let's evaluate the price action, because of course, if this DXY breaks above 101 and we start to see it climb higher into the range, maybe coming into the short-term level at 102, or maybe back up to mitigate the value area up here at 102.50, 103, that should really be putting more pressure on gold. Because of course then, if we know that the dollar is continuing to firm up, at least in the short term, it should bring in fundamentally more sellers into the market. Now, whether that obviously plays out or not is going to be determined upon how does the market dynamic close and react this week. Now, when you look at the internal structure, right, because now it's important to look at the internal structure. We've had a bottoming structure here, consolidation through the end of June to the early part of July, where we've fueled that gold recovery back in from those 1900 lows all the way up into the 1980s, an $80 move over a 3-week period, or a little under a 3-week period. Again, all that is done is just fueled and kind of been validated by the movements in the DXY. Now, you look at it now, you've got that first phase into a decent retracement or pullback, short-term retracement. You've got your secondary phase up into this 80 level. Now, you look at this 80 level up here, you have higher high, higher low, higher high, higher low in the 4-hour, but also you're seeing that shorter term, really this kind of 1-hour consolidation up here, followed by taking up liquidities in the highs, insinuating a bullish break where you would then expect price action to, if we've broken through the 80s, really continue pushing higher. But it didn't do that because, of course, then the DXY started to firm up. So this was very much a market making liquidity grab in the markets, only to reverse very, very quickly. And the reversal, as we said, was fueled by that really overriding strength in the DXY, particularly since Wednesday, yesterday primarily, and of course that little bit of a follow through today as well. So let's evaluate the price action. I think this week is going to be key to see how we close, because of course gold now, 4-hour cycle and daily, a 4-hour cycle is obviously creating higher high, higher low. 1-hour shorter term cycle isolating the price action this week is creating short term lower lows, lower highs, lower lows, lower highs. So really, until we get a clear alteration of the current dollar cycle, then you'd probably be deduced to say gold could very easily drop off even further, if on the premise that the dollar price takes out 101 and continues progressing higher. Because of course, if the DXY continues progressing higher, those gold prices should very much continue to the downside. So just keep an eye on that one. I think if you're trading short-term order flow, you've got that little bit of a pause overnight into the Asian markets, where we had that aggressive breakaway this morning on the London Open. It does look like price actions coming back in to mitigate that area around 68.70. So do keep an eye on that level. If there is any sort of reaction and maybe a selling continuation in gold, most likely it's going to come after mitigation of that short-term order flow. So we're keeping an eye on that dynamic. And lastly, moving across into the indices, well, what's been the big theme? Obviously, with that weaker DXY over the last number of weeks, we have just seen the indices continue to trend very, very, very aggressively to the upside. And you only have to look at the weekly charts even to identify how strong the stock market performance has been, not just through the month of July, not even just since the Fed started its kind of pausing, shall we say, or temporary illusion of pausing. We have seen indices run from obviously 4200s, March, April time. We're now sitting at 4550s, new cycle highs for the year, and very, very close to previous all-time highs. You look at obviously European indices got to all-time highs. The US indices is attempting to get there. Now, with the Fed maybe changing or altering its shall we say, policy cycle of interest rate policy, that could very much allow for an even deeper run-up in the indices. But today, as I said, we've got options expiry. The next couple of weeks, we do have stocks reporting their earnings, so that could be a little bit of a short-term fuel for profit taking. But as we said, if the DXY continues progressing higher into the close this week, we break through 101 and we maybe progress into 102, 102.50, that should bring a little bit of profit taking back into the stock markets, because we know from a fundamental perspective, if a dollar in normal circumstances is moving higher, having a stronger weight, or there's a capital flowing into dollar and into treasuries, then you tend to see a little bit of risk aversion in the stock markets. You tend to see the indices roll over marginally. And that's been probably the theme over the last few months, because I said every time we get any sort of pullback, it's short-term pullback in dollar strength, and then it's followed by another wave of dollar weakness, and that's allowed the stock markets to continue grinding higher. Now, if you look at the short-term cycle of price action on the S&P, for example, you'll see, if we tidy things up a little bit this week, the 45.75 level has been very, very key, because that 45.75, 4600 level is the liquidity area that was the highs from March of 2022. Okay, so this is where the hike the hike in S&Ps at the end of March actually topped out, and where the selling actually came in was just underneath 4600. And of course, this week we have got back to 4600, 45.75. We have created an initial rejection. Now, daily yesterday, there was a strong bearish close away from 45.75. It does look now, if you look at the short-term order flow again, price action is coming back up into this region again. So worth keeping an eye on that 60, 65 level in the S&Ps to see, does the selling actually break off from there? It certainly looks like the order flow and the liquidity is trying to make its way back into this region. So of course, if it was a case that we saw a short-term rally, DXY then breaks through 101, continues maybe 101.50, 102, that should then bring further sellers into the S&Ps next week. So worth keeping an eye on that dynamic. And then of course, if we move across to Nasdaq and Dow Jones, right? So Nasdaq, very, very clear in its movements, because of course the last 8 weeks, shall we say, with that movement into the stock markets, into that risk orientation or risk emphasis in exchanges, also by investors and that broader market sentiment, the Nasdaq has been like a runaway train. So you look at the bias, you look at the logic over the last 8 weeks or so in particular, when the Nas at the beginning or end of April, beginning of May was at 13,000, almost 2 months later, end of June into the middle of July, we're now sitting 2,800, 2,500 points higher, which again shows the appetite, that straight line buying, short-term retracements, clear enthusiasm for buying risk. And buying risk means buying, obviously, riskier stocks. Your most aggressive outperforming stocks are your big guns, which is obviously your Apples, Microsoft, Nvidia, just to name just a couple. Okay. Now, when you look at the 4 hour, 15,800's had a very, very strong reaction this week. Clear top again. We did temporarily break through it, but then we very quickly on Wednesday and Thursday got back underneath, but actually got back underneath for new weekly lows, because on the week, this was our weekly lows here around about 15,550, 15,600. That was our weekly lows for this week. Yesterday, like a steam train, got that little bit of a break back underneath those weekly lows. Now, we have found a temporary bottom, but you'd expect that to happen. We found a temporary bottom. Price action, like we're seeing in the S&Ps, is making its way back up, and I suspect to mitigate this area here around 700. So keep an eye on this 700, 750s to see if there's any sort of short-term rally, short-term pullback into the value area, because that could bring the next wave of selling coming through. And that next wave of selling really just brings in 15,000 again, because of course, selling ends, very, very clear buying imbalance, a little bit of a fair value gap, a little bit of a pause, breakout through 15.8, but very, very quickly reverse. So we could very easily see that short-term recovery followed by the next wave lower. And then you're really looking at price action coming down to mitigate all of this bullish order flow that we saw through the mid parts of July. So that's why 15,000, 15,200 could become very, very nice downside targets, which would give a little bit of a short-term wave of DXY strength potentially on one side, but also stock market weakness on the other. So let's see how that one plays out today, and obviously through the early parts of next week as well. Now, last but not least is Dow Jones. So we know the Dow Jones has been a little bit of a laggard in comparison to the S&Ps, in comparison to the Nas, but without doubt it has seen some progression this week. We know this week, looking at the earnings, if we bring up the earnings calendar again, okay, so you look at the earnings calendar this week, a lot of banks. Now, if you look at the Dow Jones, you will also see a lot of the stocks within the Dow Jones are financial orientated, right? You've got your JP Morgan, you've got Morgan Stanley this week, you've Bank of America, you've Goldman Sachs. a lot of the Dow Jones stocks are not, what shall we say, are higher weighted stock market individual stocks, right? Because in the Dow Jones, you have a lot of other staples, consumer discretionary, financial stocks, and that's why the Dow Jones has done rather well this week. Now you look at, for example, Goldman Sachs numbers, you look at the Morgan Stanley numbers, a lot of those numbers has done pretty well. So for example, take Goldman Sachs on Wednesday, the EPS on the share price was marginally down, but the revenue was about 15 billion higher than expected. I think the revenue expectation for Goldman was around about 11 billion. It did over 26 billion in revenue. So figures like that showing that high growth in the financial sector is going to fuel that performance in the Dow Jones, which we have seen this week. We've seen very, very aggressive moves Thursday. We saw very, very aggressive moves Wednesday, and we saw very, very aggressive moves on Tuesday. Now, what's the common theme with that? When you look at it, a lot of banking stocks on Tuesday, banking stocks on Wednesday, and some stocks related to yesterday as well, particularly with the airlines Johnson & Johnson and that as well. All right. So with the Dow Jones, very, very clear, obviously movement to the upside, leaving some fair value gaps down here around 34.6 down to 34.2. So you've got kind of three incremental fair value gaps. You've got this grind up here, aggressive break through 35,000. So 35,000 will become a short-term pullback level as well. But at this moment in time, the Dow Jones is comfortably above all of those areas as we see another fairly strong close. And that was certainly visible with that strong break above 35,000 this week, where price action aggressively went higher. Now, you look at where we are in cycle terms, a lot of liquidity over here around 35.4, 35.5, and then you're really just almost looking at price action mitigating all of that 2022 decline and moving back into all-time highs again. So worth keeping an eye on that one this week to see how does the Dow Jones play out. Do we see a little bit of strength in the dollar? Do we see a little bit of movement in that regard? But at this moment in time, US indices, despite that little bit of a resilience dollar, is still holding relatively firm to the upside. So keep an eye on the Dow Jones as well. FTSE this week is quite interesting because, of course, we talked about the pound this week getting absolutely battered, particularly Tuesday, Wednesday and Thursday. Wednesday, particularly, of course, given the weaker than expected inflation numbers. So with that weaker pound this week, it has fueled a fairly decent rally, a significant rally in the FTSE 100 in the UK, which has allowed that FTSE 100 index to progress significantly to the upside. Now, as we just while the chart's updating, we might just have a quick look at the DAX. The DAX too had a similar move. So the DAX last week, or in the early parts of July, broke structure, found itself moving progressively higher back up into this value area between 16,100, 16,200. And certainly this week, we have seen that consolidation very, very visible, that V-shaped move, taking out the lows, V-shaped move, back up, creating that kind of reversal, very, very sharp reversal structure where price action is now consolidating in this region. So worth keeping an eye. How does European indices close this week? It's been fairly subdued this week overall in comparison to the two previous weeks. And I suppose that's obviously something you're going to be watching out for very, very carefully. Same again with the Euro stocks, very, very clear break down into 4200s, almost immediate reversal back up into all-time highs of 4400. And as I said, this week, European indices, very flat, very, very consolidated. So we're pretty much migrating back and forth between 4350, 4400, 4420 in Euro stocks, which is showing that maybe European indices this week is taking a little bit of a pause. And as we said, last but not least is our FTSE chart, which is currently uploading. And again, showing the very, very aggressive nature in that FTSE pullback. Right. So with that weaker pound, we talked about there very, very visibly, the overriding theme is reversal. Right. So we've taken out new lows in the cycle, 7250s. We've come all the way back up into 7450, 7500, which was an initial target for me to look out for. But we've completely blitzed through. We blitzed through. We took out the short-term order flow. We have now attempted to break out the liquidity from 7650, which we are in the process of doing, which would basically insinuate to me that the probability is that price action is going to come back up here into this 7700, 7750 level. Now, at this moment in time, as we said, as long as the FTSE is continuing to grind higher, that should mean that the pound sellers should still be visible in the markets. Now, worth keeping an eye, if you trade pound yen, GBP USD, GBP CHF, Pound Aussie, Pound Kiwi, Pound CAD, for example. Those are pairs that should be watched very, very closely, particularly if we start to see an inflection point in this very, very bullish FTSE 100 index over the last couple of weeks. So worth watching that closely. I think at this point in time, we're trying to take the short-term liquidity at 7,700, which would bring in potential order flow at 7,750. So do keep an eye out on that this week coming. So that's pretty much it, everyone, for the weekly market run through. A fairly thorough weekly analysis given the volatility, earnings season as well, the data, not to mention obviously the rates. So next week it'll be all eyes on the price action again. We'll be back next week to preview the volatility ahead of it for month end July, which has been a very, very fast month, and of course setting the tone for the rest of the summer as well. All right, everyone, have a great weekend. Trade safe.